Welcome to my video on Chapter 4. In Chapter 4, we're going to go through our period end procedures and make general journal entries, update our chart of accounts, record adjustments, look at the effect of period end adjustments on our trial balance, and then specifically get into more reports. As we review Chapter 2, which was vendors, and Chapter 3, customers, in QuickBooks, we record our daily activities, which include entering bills, paying bills, writing checks, creating invoices, receiving payments, and entering sales receipts. And then finally, going in and recording those deposits. However, behind the scenes, as we've learned, QuickBooks also records all those activities in our general journal. Remember, you can always run the journal up under Reports, under Accountant, and under Journal. And I'm just going to run all the dates so we see all of our activity. But if you look, as we've gone through, we've been writing checks, doing invoices, making payments, creating sales receipts, as we can see here, and making deposits. And as we've gone through and done all of those things, guess what? We have to make adjustments. And we have to make adjustments for items that don't appear in our daily activities. And those are items that are important so that our financial statements are properly prepared in accordance with our friend GAAP. The adjustments that we have to make are called adjusting journal entries and then are recorded in the Make General Journal entry area, which if you go up to Company, you can choose Make General Journal Entries. And let's take a look at this screen. This is where we're going to make a manual entry. Now, in our previous chapters, what's been nice with QuickBooks is that behind the scenes, QuickBooks is doing our entries as we enter information in our different forms. Like I said, whether it's entering bills or creating invoices, whatever it is that we're doing. But guess what? Accountants are still needed. We'll have to make adjustments when needed. When we do our adjustments, we're going to have to go in and choose our date, put in our entry number, and you'll just follow what's in the book. And then we're going to pick our adjustments accounts. You know, maybe you're adjusting for prepaid or you're adjusting for your depreciation on your furniture. Whatever it is that those adjustments are that are needed. So before I get ahead of myself here, let's actually, before we go into actually making a general journal entry, let's just go in and let's get more familiar with lists. Okay, and I'm going to go back to my company homepage here. One of the first lists that you should know is going to be your chart of accounts, which is found here under Company. If you go to the Lists menu, guess what's there? The chart of accounts. Okay, the chart of accounts is your map. It's your listing of all of your accounts that you're going to use in your company. So in our chart of accounts, we have our account number, the name of the account, the type of the account. Again, a huge mistake that students can make is not classifying their account or setting up their account correctly in the accounting equation, and then what balance that we may have. And what's nice is that QuickBooks obviously lists our assets first, all the way down to fixed assets. Then we get into accounts payable, our liabilities, other liabilities. Then we get down into our equity, then into our income accounts. We've got some cost of goods sold down here, and then some expenses. What you can see in your chart of accounts is that we have our main account, and then in some instances we have sub-accounts. Why do we do that? Because on the statements we want to show the book value of our furniture, which would be the cost less our accumulated depreciation. So our furniture, for example, is $12,000. That's what we bought it for. Our accumulated depreciation so far is 100. So what is the value that's going to show on the balance sheet on our statements on the trial balance? That would be 11,900, which is the cost minus our depreciation. And the way that you set that up is, for example, let's take a look at that. So here we're looking at our furniture account. If I want to go down and I want to edit that, I can go into Edit. And you're going to see it's called Furniture. It has an account number here. And then you can put in the description. You could put in an opening balance. Or you could even make the account inactive. We're not going to make that inactive because it has a balance. And then do Save and Close. Also, you can classify the account, obviously. So if you had sometimes students, I know with Jen's Tennis Courts, which is a project that we'll be doing later, in the course, many times students, she has her mortgage payable. Guess what? Students put that as an other liability instead of a long-term. You know, it's a mortgage. It's a long-term liability. So in order to change the classification, you would do so here. And then click on Save and Close. But let's look at this sub-account here, this cost account. If you go in and edit that one, you're going to see that, hey, that is a sub-account, and you make it a sub-account by checking the box and saying, hey, I want that to sit under furniture. Or if it was the computer, if it was the cost of the computer, I'd want that to sit under computer, okay? But that's how you set up the sub-account. Again, you could put in a description and then hit Save and Close. If you wanted to make a new account, so let's go in and make a new account, you would then choose, okay, and this is where, again, us accountants are needed. Is it an income, or is it an expense account, or is it a fixed asset, or a bank, or a loan, or a credit card? And then down here, they even have other types. You know, is it an accounts receivable, or is it cost of goods sold, or is it, you know, in my case, let's just make it easy. Let's just say, hey, it's another bank account. I'm going to click on Continue, and we're going to call it Petty Cash. And then you would obviously pick an account number. I'm going to pick 1200. Hopefully that's not chosen. I'm not going to make it a sub account, but you could put in the bank account, whatever it may be. Click on Save and Close. Oh, that one's already used. Let's try 1201. Okay, so that one's taken. So, oh, now it's opening up our files. So now you can see that petty cash is listed right underneath cash and listed as an asset. So what if I made a mistake and I don't want to have that petty cash account? What do? I would click on it. It does not have a balance, and then go to a delete account. You know, it's going to let me delete it because I just made it. I don't have a balance. It's going to let me delete it. But if you, for example, were like, you know what, I don't need a cash account, which doesn't make any sense, you would click on delete account, but QuickBooks isn't going to let you do that. QuickBooks says, hey, you need to make it inactive instead. And to make it inactive, let's pick on something else here. Let's pick on this inventory. You can click here, and then you can say, hey, make it inactive, okay? And it disappears. And sometimes students panic. They're like, oh my gosh, it's gone forever. No, it's not. Down here at the very bottom, it says include inactive. You can bring it back from the dead. And it has a little X by it. So what you can do is, if that was a mistake, you can say, hey, I'm going to go back into that. I'm going to right-click on it, or you can click on your menu down here. And then I'm going to say, hey, make that account active again. And then it's back from where we started. The next thing we're going to switch and talk about, we're going to get into the reports for Chapter 4. And the first report we're going to talk about is the trial balance. The trial balance is used to verify that our debits equal our credits, which means that our ledger is in balance. And what's nice is that in a program like QuickBooks, there's less chance of the accounts being out of balance, because everything that we post into QuickBooks, into the ledger, computations, and that, QuickBooks forces them to be in balance. Okay, so let's take a look and run our trial balance, and that you can find under Accountant and Taxes, right under Trial Balance. And again, I'm going to choose all dates. You obviously follow the dates in your book. QuickBooks is very date sensitive, as I'm sure that you've learned. So looking at our trial balance here, hey, it's in balance. But does that mean it's correct? The answer to that is no, right? I mean, we could have something, for example, that's an accounting expense. Maybe that should be under advertising, or something that needs to be reclassified. Maybe our depreciation is off. We need to make an adjustment. So yeah, I mean, just because it's in balance does not mean that it is correct, as we will learn. So now we're going to switch modes after our trial balance, and we're going to go back into our make journal entry screen. Okay, and we're going to actually go in and we're going to make an adjustment. Okay, in QuickBooks, our adjusting entries are made in the Make Journal Entries window. Okay, it's set up similar to that of a manual accounting system, and we're basically putting in, okay, what's our adjustment, what's the date, what's the entry number, what account are we debiting, what account are we crediting, and we then can put in other detail, a memo, which is always very useful to your coworkers as far as remembering why you did that entry. So yeah, so we're going to go ahead and we're going to enter in some information in here. So what I'm going to enter in here is I'm going to enter in AJE. Let's just make it number 10. I'm kind of making this up as I go along here. You'd obviously choose your date as needed. And then what I'm going to do is I'm going to make sure that the box is checked that this is an adjusting entry. Okay. And the reason why I do that is because it will show up then on my working trial balance, which is very helpful. Okay. So then what we're going to do is I'm going to, in this case, we're going to make an adjustment for our advertising to record 1 month of advertising expense. And what we need to do then is we're going to choose our accounts here. So when I need to adjust my advertising expense, I'm going to, in this case, choose account 6050, which is my expense. Okay, there's advertising. And then I'm going to debit 100. That's how much that we're told that we're increasing our expense by. And then I'm going to credit my prepaid. And I originally had debited my prepaid when I purchased this ahead of time. But now I'm actually recording the expense, which is an adjustment that we have to make. So again, that our statements are reflected accurately. So notice that my debits equal my credits. What happens if oops, I went too fast. What happens if I, for example, don't enter in the right one? So what if I accidentally, put in $10 and then as my debit, and then my credit is 100, and I do save and close? Guess what? Watch this. I'm going to try to record it. QuickBooks says, you know what? This is not in balance. You have to make sure that debits equal credits. If only we had that warning in Accounting 1, right? Things would be a lot easier. So by doing this entry, I'm going to fix the entry here. And then what happens is then we've recorded 1 month of our advertising expense. And then by doing that, I just hit save and close. So as we go through your text into the practice exercises, you're going to go through and you're going to record a month of insurance expense. You're going to do your depreciation expense for your furniture, and then another entry for your computer. You're also going to record interest expense, and then you're also going to adjust supplies on hand. What's nice is that, for example, if you make a mistake, you can very easily fix it. So I had made up that entry for the advertising expense, but notice that it was already entered. There it is. Look at that. I already made the entry. So we don't want to have a duplicate because that would cause our statements to be wrong. So what are we going to do? We're going to edit this and delete it. And the way that we do that is we go to Edit, have your window open for your journal entries, and then we're going to delete it. Other options are, you can make a new entry, you can duplicate it, you can memorize it if it's an entry that you're going to make every month. Obviously, many of these are. You can also void it or reverse it. I'm just going to delete it and click on OK. Okay. But just remember, with the audit trail in QuickBooks, which we'll talk about later, with the audit trail report, which is out here under Accounting and Taxes on the audit trail, just remember, even though you delete something, it doesn't magically disappear. It will show up on our audit trail and even say who did it. In my case, it says admin, luckily, but it's a really nice way of, keeping track of what's going on in your QuickBooks file. So behind the scenes, we're making these entries. You can see that for our entries, we did the advertising expense. Here's our insurance expense, our depreciation for the furniture and the computers. Notice that, again, we're increasing those expenses. And then in this case, for the depreciation, we're crediting accumulated depreciation, just like we've learned in accounting class, our previous classes. We've got some interest we're making adjustment for, and then some office supplies. And remember, it's the office supplies that are on hand that you're making the adjustment for, the difference, basically, from what you started with. So last part of this chapter is going to be all about reports. And the first report that your book goes into is doing running the journal, which I already have open. And the journal, again, you can change the dates. You can run the report, see if your check figures match mine. Again, if your check figures do not match, you need to stop in and see me or come in for tutoring. The next report that I'm going to run after the journal is, again, under Accounting and Taxes. And I'm going to run this Adjusting Journal Entries report. And this will show me my journal entries that I've made, which I just discussed with you. So if I ask you, to give me a PDF report of just your adjustments, that is the report that you would run again under report, accountant, and down to adjusting journal entries. And again, that shows just the adjustments, the debits, the credits, and your detail as provided. The next report we're going to look at is your adjusted trial balance. Now, your book has you do this in a couple different ways. The very first option that they want you to do is they actually don't want you to pick the adjusted trial balance. They want you to pick trial balance first. And what they want you to do is run the regular trial balance. And obviously, we've made adjustments. So it's already an adjusted trial balance, right? Because we've already made adjustments, okay? To go back before the adjustments were made, we would have to actually delete those journal entries, which we don't want to have to do. So once you print the trial balance, after you've made the entries, it is the adjusted trial balance. So what they want you to do in the book is they want you to go in and customize it. And actually on your header and footer, they want it to say, hey, change this to say adjusted trial balance, right? So you know it's the adjusted, and then save your report and print it. The other option, which I think is more helpful, is out there under accountant and taxes, and you just run the adjusted trial balance. And what this is this shows you, okay, here's my detail. This is basically your working trial balance, same thing, where you can see, all right, this is what it was before. This was my balance before. And then once I make my adjustments, right, those were the total adjustments that I made, the 660. And then what is my adjusted trial balance then? And then I get the 70,700. So what's nice with this is that you get the before, you get the adjustments, and then your adjusted trial balance, which will then flow into your financial statements. So what if you made a mistake? The nice thing is you can use your quick zoom right in. And for example, what if the mistake was with the office supply entry? You could double click on that, go right in, go find in your journal entry there, and then make the adjustment as necessary. Once you do that, for example, if this was 125 and 125, okay, oops, you would then save and close it, click yes, and then, oh, look at that. It changed, didn't it? It changed my numbers. So that will obviously also have an impact on your reports. So let's run our ending reports. Under reports, we're going to go ahead and we're going to go up to company and financial, and the first one we're going to run is our profit and loss. We're going to run the standard report. Now there's different profit and losses you can run for every, different options here. We're just going to run the standard. Again, QuickBooks is very date sensitive, so make sure that you're choosing the correct dates. And then you can see here the profit and loss, same as the income statement, just showing our income, our expenses, and then our total net income. Next report is going to be our balance sheet. So again, under company and financial, we're going to go down to balance sheet again, just like the P&L, lots of options here. We're just going to choose standard. And then again, very date sensitive. Okay, I'm going to choose all so I get some activity in there. So again, on our balance sheet, what's on there? It's the accounting equation, isn't it? Your assets, your liabilities, and your equities. So again, your assets equal your liabilities, owner's equity. The last part we're going to talk about is the use of registers in QuickBooks. QuickBooks is designed for, obviously, the non-accountant. Obviously, they need us accountants, though, right, to do the adjustments and statements and taxes and all that fun stuff. But for the daily use of QuickBooks, the registers are very helpful. And what's nice is that you can run the register for any balance sheet account. If I use the Control R feature on my keyboard, so Control R, that will bring up the register. And you can see it's not just cash that I can look at the register for. It's any balance sheet account that's listed here. So for example, if I want to look at the register for cash, I'm going to click on OK. And then I can see the detail of what's been going on here in the cash account as I've gone through and paid bills and written checks and had a deposit. And I can then see how that reflects my ending balance. I can also run quick reports. So if I click on something here and I run a quick report, I can say, hey, here's a quick report for that Kuza and Carl Associates, that bill payment check. And I can even drill down even further and actually go to the bill payment. So it's a really, really, really useful feature. Registers are used all the time, but again, just for our balance sheet accounts. So thank you for going through Chapter 4, and we're moving on to Chapter 5. Thanks.